Good evening, everyone. My name is Paul Young. I'm just going to walk you through government policies related to the banking sector in Canada. My presentation is viewed as just one perspective of the banking sector. It's not deemed to be the only perspective, so I entice people to kind of go out and look and do your own assessment of the banking sector and to kind of get a more clear picture of what's going on in that sector. A little bit about myself. I'm 25 years in business, so I've had a lot of experience of dealing with different parts of government policy as well as helping companies to compete. My approach now is more about kind of helping people understand knowledge and understanding what it takes to compete, but understanding what goes on with government policies. My agenda will be to talk about the Bank Act. I'll talk about what the Bank Act regulates. I'll talk about Basel reporting. I'll talk about different aspects of government policies and what's impacting that sector. So what is the Bank Act? It's an act that governs the financial service sector in Canada. That's what you need to know. And I've attached what it basically does in terms of it, and you're more than welcome to look it up and for more detail on the Justice of Canada site. What does it cover? You'll see different things on interest rate charges. So anything that you guys have when you go onto your online banking account, when you look at your line of credit, you look at your credit card, you look at your mortgages, you look at your interest investments, these are all governed by a set of rules and regulations, and that's what the Bank Act does. Now, like anything else, when you're starting to look at the banking sector itself, you have to look at what drives in terms of understanding the financial statement side and also understanding risk. Basel reporting came into play because in 2008 there was a global meltdown. And the global meltdown wanted more clear and transparencies around the banking sector, and especially understanding the risk and what's going on with the banks. So in other words, to protect the investors from themselves, because a weak financial system does not help a country. It actually makes things worse in terms of interest rates, debt obligations, all that, and you can have a collapse. And if you have a banking collapse, that's not a good thing. So this was kind of a preemptive strike to protect banks, to allow more disclosure in terms of stress testing banks' balance sheets and make sure that they're well protected. Does Canada banks file it? Yes, they do. They file it because it's an international protocol. So it's something that came out of the 2008 recession, and it continually goes through from Basel 1, 2, and 3 reporting as we move forward in terms of the liquidity rules that's coming into the banking sector, especially on the capitalization of the bank when you're looking at the asset and the liability side of the banks. Another issue that will come in that's governing it is the accounting rules come into play, how certain things are reviewed. In 2008 meltdown, one of the key drivers of that particular meltdown was financial instruments. There was not a lot of disclosure around what was in these instruments. So the banks were purchasing on the open market through bond traders or different types of equity investors, purchasing these things in terms of moving cash around for returns on the markets. They didn't actually know what they were holding, so the new rules came into play to kind of get more disclosure around what we call embedded derivatives and financial instruments to understand what makes them up and what the risk is to them, and whether what changes in the market value. If there's a change in market value, then you have to look down to write down rules in terms of realized or unrealized gains. And that's really what's happening, more transparency around the reporting side of the instruments of what the bank holds. The banking sector in Canada itself is one of the healthiest in the world. Part of it has to do with rules that were set in play by different government policies, whether that's the Conservative Party, whether it's the Liberal Party. It's one of the best in the world. So the exposure is there in terms of certain things, especially in the mortgage, and I'll get into that area in the housing market later on in the slide deck. So what did the Liberal Party propose? In the latest budget, the 2016-2017 budget, they proposed a mechanism in play so that if we have an issue where we have capitalization issues with the bank, the government has the ability to seize assets as part of this overall restructuring. This is something that you need to bear in mind, because really what you're talking about is getting more control of people's deposits as part of restructuring the debt obligations. Why they did this, I'm not sure why, and why it's not being called out more by the media and the banking sector in terms of a policy that should have more discussion, I'm not sure. But the key aspect is the way the policy was held. It wasn't really discussed much as part of the budget process, and that's something that needs to be discussed as they move forward. Are there risks in the banking sector? Yes. The biggest risk to the banking sector is the housing market. Okay, we know that the housing market prices are 20 to 25% overvalued. So what do? Well, banks themselves have to take some accountability in terms of the overall rules. What do I mean by that? Well, they have to start looking at on the mortgage qualification as part of looking at the housing valuations. We haven't really looked at that. Everybody says it's market price that dictates the price, and that's fine. But the market price should be tied directly to key drivers, and that's growth in wages and inflation growth. It also should look at different components in terms of maintenance and utility and property taxes on the operational side. When I mean maintenance, the ability to upgrade that house, whether that's a roof, furnace, or something like that, because those will be upkeep that you're going to have to do. So the bank should be looking at this in terms of the overall qualification. Are you have the ability not just to cover the mortgage, but can you cover putting $5,000 more into your house each year as part of the upkeep ongoing maintenance? That's something that's never discussed. The other thing is the government itself has to look at foreign ownership. There's a lot of speculation when we have foreign ownership coming in, buying up condos as part of taking the money from foreign jurisdiction. This jurisdiction, that should be happening. There should be some ways to look at condos maintenance fees to make sure that realistically and they grow at a correct rate. That's something that should be discussed. So the government has its own rules to make sure that on the mortgage rates and qualification, it should watch that as part of the overall household debt. So that there's certain things. So if you ask a point blank, some of the issues are not just basically the government. Banks have to take responsibility, and people have to learn how to do capital or financial management in terms of the cash flow to understand what they're capable of doing. The other areas should come in. Monitor capitalization. The government already does this. Maybe more needs to be done from independent auditors from PricewaterhouseCoopers, Deloitte & Touche, whoever the auditors are. Maybe they do them routinely, and they have and do a stress test on the balance sheets to see where the risks are, and they call it out. And maybe that's something that has to be done as more an independent assessment in terms of the quality of the balance sheet. And maybe that's something that's mandated both at the provincial and federal level as an integrated strategy looking at the banking sector. Risk management plans. Most banks do this, but maybe they need to be tested by the Auditor General as part of its life audit cycle, whether that means at a provincial level or federal level as part of testing the Financial Services Act that each government is governed by the own SEC Exchange Acts. That's something that should be probably discussed, as well as an external auditor view. So why am I saying this? Is what the government should be thinking about is if you're going to try to bring in a new policy change, you should be also looking about how you're going to cover that and how you're going to monitor it. It's easy to throw something out there to discuss a change in banking, but the reality is all parties have to be involved, and that's something that hasn't been discussed in terms of the path going forward. Part of this video is to understand the risks and the threats to residential and housing markets as well as the overall banking sector, but what it's really trying to say is as a country we really need to look at all aspects of policy, and it isn't just one angle of policy that has to be dealt with. And that's why I tried to do this video, is to try to clear up any misconceptions. Thank you.